specific structure over the past couple of years on GME. I'm going to walk through those, and then I'm going to update ourselves on our current tracking, and I'm going to get us all up to date, reasons why. I'm going to confirm with some equations. I'm going to confirm with seasonal cycle. I'm going to confirm with macro position. If you don't know what those terms are, that's totally fine. I'm going to try to walk through it as simply as possible. So my claim is two parts. First part is that our V point of the tracking was resolved higher than $17, like a lot of other people are looking for. I'm going to explain why I think that. And then I'm going to show our macro position and what having those two tools combined and why that calls for what everybody is assuming is going to be MOASS, or a macro fractal break. Let's dive in. First, I'm going to show you these models. This is the basic fractal landmarks model. It just shows that every iteration starts with a jet test, and then you have these points of distribution that bring you back to a point of accumulation again. That's what the model shows. Here's a couple of the terms that we use. The anatomy of a jet test is A, B, and C iterations. Your C macro iteration pulls you back to a point of accumulation again at V. Your higher low is your change of trend. And then at that breakout is your fractal break, where it then starts over again. So when you're looking at, doesn't matter what ticker you're looking at, this is the basic structure of every ticker that you will look at in the market. Every ticker. They are at different scales. You have micros, macros, and ITMFs. They are, and for the model's sake, your thicker black line here is your macro. This is the overall largest pattern that everything is going to be following the rules of. That's a macro hierarchy is the term. Inside of your macro, you have ITMFs, which would be these dotted triangles, these three. ITMFs are inter-trend macro fractals. And so those are not quite micros, but they are within the hierarchy of a macro. I relate these in what I call January cycles, a yearly cycle of landmarks that every pattern goes through. And then you have micros. Micros would be these really small dotted ones. These are the ones that you see on multiple small time frames, the 1 minute, the 1 hour, all these different time frames. Boom, there's the models. So when, if I say a C top, or if I'm saying a V bottom, this is how that relates. It's relating to the basic landmarks. So that is my claim. That is my models that I use for tracking. Now let me show from a macro position perspective. Macro position means when you're doing side-by-sides, you don't want to just be doing random side-by-sides. Those are what we kind of call, it looks like. It looks like May 2024. It looks like this ticker. It looks like this other ticker. It looks like is because you are going off of basic fractal landmarks. You need to anchor yourself. If you're comparing a macro to a macro, you need to be able to anchor yourself to that time frame so that you're not just constantly looking at all these different iterations. So I use 2021 as our macro position. That would be this section here from April 2020 until our breakout of September to October of 2020. Here's our side-by-side. This was from last summer. We wanted to see the pullback, create and confirm a V point like here, and then track higher highs and higher lows off of the other side. Fast forward to when we had our equation date, and I'm going to go into equation dates in a bit, so don't be turned off by that. The 1120 to 1123 volatility point is where we were looking for our V. that V to be perfect tracking. In 2020, the V was your lowest point of this iteration. So for that to be correct, we wanted to see a fall below $17.69, staying above $15, just like a lot of other people on the social media and other things are saying. They're saying that this needed to be the lowest point. That's why everybody wanted to see $17. That point was resolved at a higher price target. It failed to break below 20. It failed to break below 18. And instead started the higher highs and higher lows off of the other side, further confirming that V point was in November. Here is the micro tracking off the other side of that. I'm talking about the higher highs and higher lows off the other side of that November V point. Confirmed. This is dated, so we can have some more updated charts. Here it is, kind of side by side also, just confirming that you have these 3 higher lows of this uptrend before you get that fractal break. To go back to what I was talking about just a minute ago, this is where you break here off of your higher low change of trends, and then the pattern starts over. Here's that area zoomed in. So we're just zooming in on these higher highs and higher lows. There you go. We got our first breach of 26. That puts us roughly in this July 19th area of 2020 for the side-by-side. That means that you still have the possibility of coming up to $28 and then pulling back for the third higher low, and then you will track for your break, a macro break, since we're utilizing macro position. So that's what we were looking for. We wanted to see it top out here, pull back to roughly 24.28 this is a fib level of 23.76. Staying above 22 is key. Here it is updated, obviously with the pullback that we got yesterday. We are staying above 24.28 and still above 23.76, correct? Yes, we are still staying above those levels. That's the macro position of this. Equations. I'm going to briefly explain what the equation is and how we utilize it as a tool. I showed you in the model here, all basic fractal landmarks is in the shape of a right triangle. So the equation utilizes pulling lows and high points to forecast future volatility points. That's how the equation works. I don't want to break it too down, but that's the idea of it. You're using time and price to forecast future volatility points. I showed this model back in November, and I show it often on our lives, that by using these low points and the same high point of October 2025, that we were able to forecast all these future volatility points. So like I showed on the macro position, when we were tracking into November, that equation date was 11/20 to 11/23. And here it is kind of laid out that if we look at November here, this green, you can look at the green triangle and see that we used this low point and this high point to forecast your future trough or your future volatility point. Using that paired with our macro position tracking, determined that was going to be our chance for a V. That did further confirm. So we have a couple other ones here. Let's look at this blue one here, a low and high point to forecast January 11th to January 17th. That was a weekend. We then had Martin Luther King Day on the 19th, Monday. Market was closed. But as you can see, the volatility still came and followed that point. And then the macro one that I pulled in January of 2026, we used this furthest out low point and that same high point, and it forecasted us to a April 2nd to April 12th equation date. That was going to be another trough before volatility. Confirmed. You can also use this on micro examples. So that's what these orange triangles are. These orange triangles using the November low and the C point that followed that forecasted you to the future higher low volatility point of this iteration. That same thing is shown on our current iteration. I'm saying iteration as a completed basic fractal landmark. C top, V, higher low, break. So that's what this is showing, these orange ones. There's your higher low, and that is a completed iteration. Here they are kind of drawn out. Again, basic fractal landmarks, C top to V bottom. Your higher low was your answer, and the volatility followed. Doing that on our current iteration from that lowest V point to a high point gave us the answer. That was your higher low of this iteration. Here they are laid out. This is the tool that we use. I made it into an indicator so that you can just drag these lines, and it basically shows you exactly what I just showed you on this, that just by utilizing this low point, this high point, there's your answer. Again, low point, high point, there's your answer. Now, this is another way of utilizing the tool. Instead of using a low point to high point, you can also use it high point to low point. So what this is showing is that from the high point to low V of 2026, it forecasted your higher low of this iteration. This iteration forecasted the higher low here. Same thing, this high point to low point forecasted you to what we are currently in as the window of what I'm assuming is going to be this landmark. What follows this V is volatility break. So that's what we're looking for coming off of this equation answer. Again, this is what they look like with the tool. High point, low point answer, and our current high point, low point, and answer. Current answer is 424 to 429. So this window just closed yesterday. Using the previous example, this is what it forecasted, this is what followed. So currently what forecasted and what's to follow is why I'm looking for upside now. So we're pairing now the equation with macro position, and both of these things are telling us that we are still tracking higher highs and higher lows on these specific dates to an uptrend, and then ultimately to our macro fractal break. So now let me show, this is a yearly cycle of landmarks. Let me start with the JANS. The JANS is a 1 year cycle of landmarks. I showed this just a moment ago, that within a macro pattern, you have these ITMFs, intertrend macrofractals. These are our yearly cycle of landmarks. So out of our 5-year macro that we've currently, been tracking through since 2021 to current, every year you have a specific, very unique set of landmarks. Are they that unique? I mean, not really, because what is it? It's basic fractal landmarks. So every year you have a completed iteration. That gives you a solid anchor to expect a certain landmark throughout the year. And I said this in a bunch of our previous lives, if in January and February, there was a lot of people showing the side-by-sides to May 2024. I didn't agree with that, because you have to anchor yourself within the yearly cycle. So if you are in, like where we are right now, April, going into May, then you should be able to look at all the previous years and find that same unique peak or trough that corresponds with the month that you are in. This has been going on for 5 years. It's not something new. This is something that we've been doing for the past 5 years. Here is the JANS updated every spring. You can see you got your bottom, you got your bottom, you got your bottom, you got your bottom here in 2024. Here is 2025's bottom, and what we currently had as our April bottom, and then tracking off the other side of this. Breaking down just since 2023 to now, I highlight each one of these months. Every month represents a either peak or trough. So every month either is a trough or a peak, and you're determining where you are within the year based off of each one of these iterations. So we have 2023, 2024, 2025, and what we're currently playing through. So I highlight just this December to April kind of pattern. Peak, trough is your A, peak, March, peak, pull back to April. So again, February A, B, and C is your April. 2025, here is your A, B, March, C, April bottom. And what we currently have are A, February, B, March, pullback for this April confirmed, and the breakout of the other side. Here is, now this is slightly dated, but here is those different Jans to spring, right? The Jan to spring iterations stacked on each other. So this is 2024 from your peak April bottom, and then obviously what followed. I'm going to do this in order. So 2023, January to spring, again, a peak to your pullback to find your May high point. 2022, again, C peak, V bottom, higher low to then go find your spring high point. Here it is laid out on our macro position. So what I showed in the beginning, our 2020 macro position. It is exactly the same. From a C point to a V bottom, your higher lows off the other side put you into a fractal break. And then, of course, our current. So again, high point, V point, we are tracking higher highs and higher lows off the other side. Every one of these iterations, not every one of them, the past few iterations, 2025, 2024, 2022, and even 2021, your C top to V bottom have been in a downtrend. That means your March B landmark was lower than your previous. Your February was a lower low, right? What classifies a downtrend? Lower highs, lower lows. The only iteration, again, here's 2024, again, lower highs and lower lows. The only iteration that did not follow that was 2023, in which we had higher lows and higher highs. So for the side-by-side, this is what I set up. This is currently our tracking, but it is dated. This was heading into the equation date 4/2 to 4/12 that I mentioned just a little bit ago. But I wanted to show that we were uptrending, higher lows and higher highs following this tracking into your May peak. So I used this to show that you had two chances to resolve your $17 V that the macro position called for, this low point. You had two chances. It was either going to be, based off of our January theory, a November point or a spring or April point, right? Each one of these spring points is your chance to resolve $17. But like I just showed, we are in a higher low, higher high iteration. And it still is continuing. So even the updated is still continuing. Oh, this is out of order. Oh, so going into the earnings, into this April bottom point, going into that earnings, I mentioned I had two scenarios. If this, then that. If following earnings, we stayed above 22 and held above 23, it would then lead us to break 25, and then we would push those higher price targets, $28, $30 macro break. If it did not, and instead it broke below $21 to $20, then we were going to find that April low point of $18 to $17. Obviously, it did not follow the bearish idea. $17 was off the table following earnings. We held above 22, and we, of course, updated our tracking higher highs and higher lows off of the other side. This was another confirmation coming out of that equation date. Coming out of that 4.2 to 4.12 equation date, confirming with higher lows and higher highs off of the other side. So that is the JANs, the EQs, the current setup. What is my invalidation? What is my invalidation? Since I use JANs, the very concrete part of the study that we get a yearly cycle of landmarks every single year, in the case of an invalidation, that would be ending up back below that $22, back below $20. The only other option that I have is that we are going to complete finding the V point at $17 to $15, and the only two times that can happen would be November or for a spring bottom. Okay, you can hear me good. Or a spring bottom. So in the case of an invalidation being that we fall back below $22, I would then assume that we are going to November, and this is a very low possibility, but for the sake of having the if this then that, I always like to have, you would break down here, and just, by the end of the year, November, we would have another opportunity to find that $17 V point. If that fails, then you got to go all the way to April of 2027. And that would be another opportunity. So you can see, but it gets very hard to explain through a macro position that we still have all these landmarks, and the levels alone don't really confirm this, and it is a very, very, very low probability. But for the sake of having if this then that, this is what we have. That's my invalidation path. If it happens, that's what we have. But for right now, I am using macro position and seasonal cycle. Seasonal cycle, again, just to further confirm, seasonal cycle tells us that the highest point is May, or spring high points of every year. So spring high point of every year plus macro position calling for a new jet test, like our macro position shows of 2020, right? This is a fractal break, macro fractal break into a new jet test. So we have macro position calling for new jet test, seasonal cycle calling for the highest point of the year being May or spring, and incredible micro tracking ever since our bottom in November of last year to our current. We are still micro tracking into MOASS. MOASS. What makes it MOASS? Because what I just walked through is not just a GME thing. In the Discord, we have done this for literally years now on multiple tickers. The idea of MOASS, mother of all short squeezes, is where you have all these converging cycles of different tickers converging to the same jet test moment. We have a lot of them. Over 100 tickers. So that's what MOASS is. And really, I mean, depending on who you ask, I think MOASS has been ever since 2021, where we've had all these tickers that, shoot off new jet tests. Everybody's wondering, why is Carvana at $450? Because it's MOASS. MOASS is not a overnight event. MOASS has been something that has been growing and growing and growing. And now we have a lot of, and the better reasoning that I found is, milkshake theory or the Japanese yen carry trade. It falls into all of that. I'm not going to dive into that. This is pattern based. I don't really care much about fundamentals. I care about pattern. So that's my GME walkthrough. I appreciate everybody kind of sticking around over the past years. As far as the Discord goes, we've had some people that have been in and out for 3 years. I thank you guys. Shout out to all of you. Some of you followers that may have came from Twitch, the Twitch stream days, I thank you guys again, years. If you guys are new, I appreciate even you guys for paying attention, walking, engaging, asking questions, whatever it might be. I appreciate you guys as well. So thank you so much. We are going to continue micro-tracking these tickers into ultimately a MOASS type event. I'm happy that I was able to walk through some of the stuff that I've been watching over the past couple months very, very closely. And I hope that I was able to explain it in a way that everybody can kind of understand and follow through with.